video, I'll share the mistakes I've personally witnessed and walk you through what not to do when you inherit a home that's behind on payments. Here's what a CNBC anchor had to say about this exact same situation.
Also know that as a percentage of income, that debt load has mostly been manageable. High debt, but guess what? We can afford it. But now some of that is beginning to change. For more on both the housing and car stories, let's bring in Diana Olick and Philip Bowe. Diana, let's start with you. What are you seeing in one particularly, call it, fragile part of the mortgage market?
Well, Brian, the mortgage delinquency rate, has been really low for nearly a decade. And aside from a very brief jump at the start of the pandemic before those government forbearance programs, it's now sitting at just 3.98% overall, that according to the Mortgage Bankers Association. Compare that to just over 10% back in 2010 during the subprime crisis. The mortgage landscape, I'm saying, is quite healthy with one major red flag. FHA loans, their delinquency rate, while always higher, has been rising recently, now hitting 11.3%, and that is the highest since 2013.
So here's what not to do. Mistake number one, thinking the bank cares about your situation. Did you know that the word mortgage, gauge, means contract till death in Old French? Look, your mom, your dad, your brother, your grandmother, whoever had that property borrowed the money for it, and the bank wants their money. The debt does not disappear just because your family member passed away. Now, here's where most people get confused. Yes, under federal law, specifically the Garnstate German Depository Institution Act, lenders cannot force a loan due just because the borrower died. They also can't deny you the right to assume the mortgage if you are an heir. And in many states, during probate, you can request temporary pause of foreclosure actions while the estate is being sorted out. But here's the truth that nobody tells you. A pause does not erase payments, past due amounts are still owed, and interest, late fees, and penalties still keep stacking up. Just because probate gives you breathing room legally, financially, the clock will still keep ticking. And too many people lose their house simply assuming that the lender and banker understands. Mistake number two is putting things off until later. Check out what this lady had to say.
On our way to the tax assessor's office to find out if we owe $20,000 in back property taxes because someone, not him, me, didn't know that you had 1 year to transfer the property. Whoops, we almost just got in an accident. I'm not driving. After the property owner, which was my mom, passed away. It's been 3. I'll keep you updated.
Let me clarify. You have 1 year to file a parent-child tax exemption so that you get grandfathered in to pay the same taxes that they were paying. The tax my mom paid on this house for her property was very, very low because they purchased it in 1973. So because I live in the home, the exemption gives me the right to have that same tax amount. But the 3 years I didn't file this, it will be based on current property values, which is scary.
Procrastination. Just because you're not doing anything does not mean the lender isn't. Probate can take anywhere from 6 to 12 months, and during that time, the mortgage is still aging. 30 days past due, 60 days past due, 90 days past due, and so on and so forth. I've seen heirs tell themselves, oh, I'll just figure it out when probate is done, but then it's too late. If you don't talk to the lender, request a loan mitigation hold, reinstate the loan, assume the mortgage, or sell the property, the foreclosure process moves forward whether you're ready or not. Waiting is the enemy, and probate only delays the process. It does not save you from the debt. Mistake number 3, which I see so often, is fighting with family instead of working together. I had a situation with a client that inherited a house from her father. Now, all the siblings left it up to her to figure out the mess that her father had left behind. And to make it worse, the father had a young girlfriend that felt she was entitled to the property because of common law marriage and because she had lived in the property so long. So they were fighting the property back and forth until her uncle had to take over as executor of the estate. But the situation was so messed up that they stopped fighting 2 weeks before the mortgage went into foreclosure. Luckily, I was able to step in and help them save that property, but they could have easily lost it. I mean, it was till the last day before foreclosure that we're able to save that property, and the bank was willing to work with them. If you're in a situation like that, I beg you to put your pride aside. At the end of the day, it's an inheritance, aka a gift. It's something that was given to you. So don't get greedy over it, okay? If you have to share the proceeds with somebody, just get it done, because it's a gift and something that you did not earn. And a bonus mistake I see people do is try to keep the house out of pride. The house is past due, they're delinquent on taxes, and they keep ignoring it, or they're trying to catch up, but there's no way they can, but they feel like selling the house is disappointing their mother or grandparents that left it to them. Look, if you don't have the money to keep that house, be real with yourself, sell the house, take the money, and buy something else. You can still keep the legacy of the family by buying another property from the proceeds of the inherited property. Don't lose your grandmother's house due to greed. At least get something from it. If you need a cash offer on your property, if you need help navigating through probate, if you need somebody to talk to a lender on your behalf, I'm here for you, or I can send you a recommendation to the right area. Don't lose that house. We're here to help you.